Can you claim your mortgage interest when you are doing your self-assessment tax return? Hi, I'm Kimberly Shapcroft, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. I still hear the myth that you cannot claim mortgage interest on your tax return. And the simple answer is yes, you can be claiming your mortgage interest. However, a number of years now, it did change. So it's not quite the same as it used to be, where you could just claim it against your rental income and it was a rental expense. Now we just have to be aware that it is treated as the interest rate relief charge or the finance cost credit. So what this means is that we are going to be claiming for an element of your mortgage interest, and I will reinforce that that is interest, it is not the repayment you make. If you are paying interest only mortgages, then you're fine, it will be the payment that you're making each month. If you are on a repayment mortgage, then this means it's only the interest element for that tax year. So we're talking the 6th of April to the 5th of April each year. That is allowable for tax purposes. Now, how it gets treated when you do your tax return is you'll calculate your tax taking into account all your rental income and expenses, and you will ignore your mortgage interest and any other finance costs at that point. However, when you come to do the calculation, whether it be through an accountant, whether it be yourself, whether it be on HMRC's site, you'll then include in a specific box on the tax return the interest rate relief that you are getting. Now, this interest rate relief is calculated based on your interest paid, but it is the lower of three numbers, which is the lower of your finance costs for that year, the lower of your rental profits, or the total adjusted profits. The whole point of this figure is that it can't be higher than the rental income that you have incurred or the total income you have for that tax year. You can't use this adjustment to create a loss or a tax refund. However, you can use it to reduce your tax down to zero. When you've worked out what that figure is, and do check out some of the calculations on the channel that have been released in the last few weeks and some of the other videos where it's got details of how the Section 24 interest rate relief calculation is done. But when you have got to the point of you know which figure you are using, whether it just be that finance cost for simplicity, you are then going to take 20% of that. Now, this 20% is 20% whether you're a higher rate taxpayer, a basic rate taxpayer, whatever taxpayer you are going to only be taking a 20% tax reducer in effect, which therefore means it will reduce your tax by this value that you've calculated to then work out what tax you are going to actually pay. The big change that we had over a number of years was that this really did impact the high rate taxpayers, because before they were getting 40% tax relief, whereas now they're only getting 20%. And for our basic rate taxpayers, it didn't make any difference unless they were in the bit where it was going to mean that they went over the 50,000 into being a high rate taxpayer, because the interest charge reduced their income under the higher rate tax threshold of 50,270. So it's something to make sure that you are aware of, make sure that you are claiming, because it will definitely help reduce your tax, especially if you're paying a couple of £1,000s worth of interest. With interest rates having gone up over the last few years, this has had quite an impact. And I know from personal experience, from having a 2% mortgage to now having a 5% mortgage interest rate, that the costs of having these mortgages have gone up, and we want to be making sure we're getting tax relief on as many costs as possible. Now, something I want to just move on to is the future, because in the future we have some slight changes coming. And as you may or may not have seen in our budget, check out the budget video if you didn't see the budget details, but we have got a change in the tax rate for our rental income. So our rental income tax rate is going up to 22%. This means the 20% is disappearing, which we are paying up to the 5th of April 2027. And from the 6th of April 2027, the 2027 to 2028 tax year, we are going to be seeing an increased tax rate of 22%. Now, on a positive, the interest rate relief calculation is now going to be increasing to our 22%. So we're still going to be having a look at the lower of our finance costs, our rental profits and our total adjusted profits. But when we've taken that figure that we've now worked out, we are going to then be getting back to that point of doing the reducer, but rather at 20%, it's going to be our increased rate of 22%. So that's a positive. They're not restricting that any further. It's going to be the same as it is now, just with the new rate. So it's just something to be aware of, and do check out the videos on rental income changes and changes in the tax rate, as it does show full calculations on there with this new 22% tax reducer to give you an idea of how it fits together and just show you how it works. Mortgage interest is one of those areas that has been very up and down in recent years. Whether we will see any reduction in interest rates as the Bank of England interest rate is starting to come down in the UK in 2025 and 2026, we will have to see. But the key thing that I want to make sure that you are claiming on your tax return is this interest charge. It will help reduce your tax bill and make sure you are including it. Following on from that, you may not have been claiming it, and the question you'll probably ask yourself next is, well, how do I claim it for the years that I haven't claimed it for because I didn't realise I could? If you are in that position, then it's not a problem, but you can only go back so many tax years. So you'll only potentially be able to go up to 4 years, depending where in the tax year we are when you are watching this video. So on that basis, if you are in that position, you need to get yourself in gear and you need to be making sure you're putting in adjustments to your tax return to add that expense in and hopefully get a tax refund for any tax you have overpaid in those years. If you do need any help, seek the assistance of an accountant and they will be able to assist you through that process to do the adjustments to claim that interest. But hopefully that will then get you a little bit of tax back, and going forward it will keep your tax bill down to a minimum. With all the tax rates going up and rents going up, it does mean unfortunately we're probably going to be seeing increased tax bills. So if we can be claiming these expenses, it is just helping keep tax to a minimum, which is so very important to all of us. Hopefully today you've discovered what is happening with mortgage interest on your current tax return and what is coming in the future. If you have any questions, then please do let me know and leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.